ladies and gentlemen, and this is our last segment. Thank you very much for remaining with us. You're watching Financial Markets. My name is Anthony. Now, moving to URA remains optimistic that it will achieve the revenue targets set for the 48.1 trillion Uganda shillings budget that was, of course, read by the Finance Minister Kasaija. Now, the Uganda Revenue Authority has affirmed and said that it remains optimistic that by the end of June, which closes 2021-2022 financial year, it would have collected at least 2 trillion Ugandan shillings to achieve the set target. Now, the speech, in a speech delivered during the East African Community Post-Tax and Budget Dialogue in Kampala, that is with, of course, at Serena Hotel, Mr. John Musinguzi, who is the URA Commissioner General, said that government set a target of 22.4 trillion, out of which 20.5 trillion has so far been collected. He said that the URA is optimistic that they are going to achieve the target of 22.4 trillion as of Monday this week, and of course, they said they were at 20.5 trillion before at the reading of the budget. They say they need only about 2 trillion to finish the year successfully. And he said, noting that a number of simplified and automated processes have supported taxpayers in many ways, that has been seen an improvement in voluntary compliance. And now, however, URA has, since the year began, posted a number of collections deficits which have impacted the earlier set target. The deficits, notwithstanding some surpluses, have been occasioned by a slowdown in economic activity, dampened by a surge in commodity prices. Mr. Musinguzi said during the year, URA had worked on a number of innovations such as auto conversion of customs declaration to combat dumping, expanded the national electronic single window platform to accommodate 21 more process managers, instituted 24 hours non-intrusive inspection technology, which have gone a long way in simplifying the tax payment. Other innovations, he said, include adoption of the mobile tax officers, among others, with the view of improving access to revenue services in areas where there are no permanent offices. URA has approximately 10 days within which it will have to close the deficit, and the 2021-2022 financial year will end on June 30th. That's according to reports from the URA and the Bank of Uganda. But remember, Minister said that the tax base in Uganda has increased, and definitely that they will collect more taxes this year. But in the last financial year, they had to collect about 22.45 trillion, and of which they had only collected about 20.5 million by Monday, trillion by Monday. And so they are pledging that 2 trillion will come out in the next couple of days, and they will be able to meet the budget's demands before the end of the financial year, which ends on 30th June. We'll see how they do that, but as well in the next financial year, of course, taxes will start being collected on the 1st of July, which begins a new year a new financial year 2022-2023, and of course we have a budget of 48.1 trillion with several allocations in health, education, and other sectors that the government aims at improving. We'll be looking at how government will be getting that money, but one way that government is planning to get money is through local or domestic borrowing using treasury bonds and bills. And this is where financial markets play a very important role in the economy by being able to give public a chance to gain a little coupon or interest by lending the government for a period of either 3 months, 6 months, or 1 year for treasury bills, or a period of 3 years, 5 years, 15 years, 20 years for the longer term, probably investors, due to, of course, giving government time enough to grow infrastructures and increase the GDP by using creating industries and creating jobs and so on, so as government can pay back in due time. And that will, of course, be one of the benefits that you and I can harness before government actually runs out of options in terms of collecting revenue from us. Now, yesterday we did a story on cryptocurrency, and Kenyans have suffered most after the clash of cryptocurrency. Over 4 million of them have made extreme losses after cryptocurrency crashed over the weekend. Now, the ongoing meltdown on cryptocurrency industry could push the estimated 4 million Kenyans that participated in trading the digital assets deeper into losses, of course, as the leading crypto, Bitcoin, struggles to stay above the key mark of 20,000 US dollars. The crypto market, known for its wild price swings, has shed more than half of its value since November last year, as investors pulled out money from riskier assets amid worries over soaring inflation and rising interest rates. This has hit an estimated 4 million Kenyans, mainly young and small traders, who are in the recent years have flocked cryptocurrencies in the hope of quick returns, despite warnings from the regulators like the Central Bank of Kenya that the emerging assets can be high risk. Now, blockchain analytics firm Chainalysis, which ranks countries on crypto adoption, revealed that Kenya has about 4 million crypto investors. Chainalysis relies on web traffic data to peer-to-peer platforms to track crypto usage in different countries. The firm, which tracks crypto flows for financial firms and US law enforcement, reckons that Kenya is among the top dealers in peer-to-peer cryptocurrency platforms, which allows traders to transact directly with one another without the need of a centralized third party to facilitate the transaction. The 4 million is higher than the 3.07 million Kenyans who are formally employed in the formal employment sector, signaling that most of the investors, most of which are students, workers in the informal sector. The sector is not regulated in the country, which makes it difficult to establish the value of the digital assets held by most tech-savvy Kenyans, but the amount could run into billions. Now, Kenyan investors buy cryptocurrencies to preserve their savings, carry out international transactions, either for individual remittances, for those working in places like Europe and North America, or for commercial use, such as purchasing. The payment of imports through cryptocurrency is seen as convenient and quick because the traders no longer have to buy dollars, since the Kenyan shilling, or of course, forks out the fees for money transfer like Western Union. But the recent turmoil is inflicting pain on these retail as dealers termed the market swings normal. The sell-offs should not try to worry crypto investors, but they say that what is happening are just moving, of course, their cryptos to less riskier assets, just like what we have seen in the traditional financial markets. According to George Mwakisha, the Kenya lead representative for Binance, which is the world's biggest crypto exchange. Bitcoin, which is the world's biggest cryptocurrency, dropped on Saturday to as low as 17,500 US dollars, falling below 20,000 US dollar level for the very first time since December 2020, and it picked up slightly during the London trading hours on Monday at around 20,510 US dollars, but it has still lost about 55% of its value this year and 35% of its value this month alone in the cryptocurrency sector's latest meltdown. Bitcoin's fall follows problems at several major crypto firms. Further declines, of course, market players said could have a knock-on effect as other crypto investors are forced to sell their holdings to see that they meet margin calls and cover losses. This has made it difficult to gauge the scale of retail investors' pain from the crypto plunge and effects on future appetite given the cloudy nature of the market. Cryptocurrencies are unregulated in many countries and their legal status is quite unclear, meaning there is no safety net and little recourse if you lose funds. Cryptocurrencies are new, and so many people are operating and commenting from a point of little knowledge. But for millions of unemployed young Kenyans, including university students, it is an investment and it earns them an income, according to Mr. Mwakisha. The Central Bank of Kenya holds a different opinion from what Mr. Mwakisha said, saying that the central bank governor, Mr. Patrick Njoroge, says that cryptocurrencies pose risks to financial stability, arguing that digital currencies could solve problems such as bringing the poor into the financial systems or cutting transaction costs. The Central Bank of Kenya in February invited the public for views on potential introduction of a digital currency known as the Central Bank Digital Currency, which is the CBDC, to offer some benefits, especially in reducing cross-border payments across the country. But cryptocurrency assets have proved popular in Kenya despite central bank warnings about their risks. There was a lot of hype of cryptocurrencies at a virtual event moderated by the International Monetary Fund's Africa Director, Abebe Amro Selassie, in June. He suggested that cryptocurrency assets could be regulated as a wealth product, and the fall in crypto markets has coincided with a slide of equities as US stocks suffered their biggest weekly percentage decline in 2 years on fears of rising interest rates and the growing likelihood of a recession. Bitcoin's moves have tended to follow a similar pattern to other risk assets such as tech stocks, and of course the overall crypto market capitalization is roughly about 950 billion US dollars according to price site CoinMarketCap, and down from a peak of 2.9 trillion in December 2021. Investing in crypto assets such as Bitcoin picked up during the pandemic alongside the NFTs, which is the non-fungible tokens, driven by perception of safer assets and social media frenzy. And the meteoric rise of leading blockchain tokens elicited excitement, attracting newcomers who, of course, wanted to learn and invest, while some individuals saw it as a safe place to put money. And of course, we've talked a lot about crypto, but definitely because many people have so many questions when it comes to how they gain from crypto, how cryptocurrency works. And of course, we brought many people on board here to discuss the same. But as we already saw, the world cryptocurrency market, we've had the very many of them drop over the last couple of years. And of course, this has not excluded the biggest coin, which is the Bitcoin. As we already saw, it's just coming back after a week decline of about 3,000 US dollars in terms of what the coin is worth. And today it sells at 20,482 US dollars. And the next coin, which is the Ethereum sells at 1,094 US dollars. And that is a 0.22% increase. Now, the purpose of the Bitcoin Exchange Traded Fund saw an outflow of 24,510 coins just last Friday, and the most severe redemption on a single day since the fund made its debut on the Canadian Stock Exchange in April 2021, according to Norway-based Aken Research. Now, the outflow means that the fund will sell about 500 million US dollar worth of Bitcoin at Friday's price, adding to the selling pressure in an already shaky crypto market. And of course, Akin wrote in a report, the enormous outflow are likely caused by forced seller in a huge liquidation. And the forced selling of about 24,000 Bitcoins could have triggered the Bitcoins move down towards the 17,600 mark. The Bitcoin also on Saturday, tumbling towards low as 17,000, as we already mentioned. But crypto is a quite risky market, but it's also a quite interesting market. When it comes to gains, these people gain a lot of money overnight, but similarly, losses are hefty when they come. And so they're quite risky ventures, and I would say it requires you to have the basic knowledge, not just the basic knowledge actually, but it requires you to have the most of the knowledge, as much knowledge as you can get before you start investing, deciding to invest in cryptocurrency. Remember, we are financial markets, and we give you information concerning stock markets, equity markets, now even cryptocurrencies, because we cannot do away without currency. And one of the currencies we look at here are the cryptocurrencies, right? And these give us a little bit of what the digital assets and what the future looks like when it comes to transactions. Just to give you a little bit information on crypto does not require physical money in order for you to transact or do a certain maybe transaction. You only do it virtually, and you never see a Bitcoin, even if they represent the Bitcoin with a coin. It is literally not a coin. It's just a virtual currency, 100% virtual, decentralized and unregulated by any bank or any financial institution or any government. And this is exactly the aim of the currency, to see that no intermediates come into the transaction. You want to buy something in Dubai, you just need to transfer a coin from your account to another account. That's it. No central bank, no conversions, no forexes, nothing. And they think that this means of transaction is the future of the world, where no one regulates the transaction space, but rather the people transacting themselves. And of course, most governments have seen this as a threat to their economies, especially in terms of their currencies. For example, the stronger currencies like the US dollar. And of course, even the weaker currencies, people want to still defend their currencies, because this way government can regulate and get to know how much money people have, how much money is in people's pockets. But with crypto, it's very difficult, given the fact that no one really gets to know. You just carry out transactions virtually and anonymously, without names of people attached to certain figures, just a certain identification number, and that's it. Yeah, so that's why governments are running away from it. But we'll be giving you more information on that on the show. And of course, remember to always save and invest. You may not invest in crypto, but you may have to invest in businesses that are listed on the stock exchanges. You may invest in treasury bonds and bills. You may invest in things like fixed income securities that give you an opportunity to use your investments, use your savings rather, to make a little extra money and get yourself out of poverty. And the money market doesn't require much, because as I told you, The money market is a short-term kind of thing and much safer. And if you're just starting out, I would advise you find a fund manager and they guide you on how to start using unit trust to save. For example, Zeno Investments, for example, Sanlam, UAP, all these brokers and fund managers that are licensed by the Capital Markets Authority could help you, start saving with a unit trust fund. A unit trust fund can also be called a collective investment scheme, where many people put together funds, and these funds are used by the fund manager to just, invest in several things and help you to actually, get returns. And they have a fixed return every single year. For example, Sanlam, which recently had their AGM, had a return of about 11% actually last year, and they're planning to increase that. Imagine getting a return of 11% on your savings that would rather be in the bank or probably in a box somewhere. So it's a way to start. You can start with as small as you earn. The little you earn, put aside something and put it in, in an investment, and you never know how much return you can get. That's it from us today. Of course, coming up next will be Mr. Makubia with Yuji Tukole. We shall also be having later Jane Koleda with Mr. Hassan and other very wonderful programs which you don't want to miss out on. Remember, this is Smart 24. You can catch us on YouTube. That is at Smart 24 TV on our live stream. Or you can catch us on our social media platforms like Twitter, that is at Smart 24 TV, or Instagram at Smart24_TV. And as well as my personal handle is Anthony Sebale, which is of course my name. And then definitely you can catch all the conversations and the latest news updates on the business space. Or you can visit our website, that is www.smart24tv.com for more information on the stories we have and the business world and what's happening on the several platforms. Thank you for being with us. I hope to see you tomorrow again. Have a very lovely day. See ya.